Good afternoon and welcome back to Your Financial Independence, where we're always trying to grow your financial independence. So, Lemonade fans, we had earnings come in today, and in my opinion, they did not do good on earnings at all. But it's kind of out of their control what happened. We're going to get into that, and could it have been even worse earnings? What can we expect in the future? So if you want daily stock market news every single day that the stock market's open, make sure you subscribe, like, and comment. Hit the bell notification. Let's grow this small channel. And without further ado, let's get into this. So I do want to point out that they just released their financial results, but tomorrow at 8 a.m. is when the actual conference call is happening. I'll probably tune into it just to see what they have to say about their financial results, and maybe if they provide more insight, especially when analysts asked them at the end of the conference call. So for a lot of their numbers, they actually look pretty good, and we're going to get into that. So $252 million is their in-force premium. $229 is the premium per customer that they have. Total customers has went up 50%, so they now have almost 1.1 million customers. And then the gross loss ratio, this is what, in my opinion, this is what really killed the stock, why it's down really big right now. So it's at 121% right now. And this is all linked to the Texas freeze that happened. So whenever you have weather phenomenons like that, I mean, they had super big claims within like the first 3 or 4 days, I think. I mean, when you get freezing conditions like that in Texas, you're talking about water pipes breaking, messing up people's homes, car damage. You have all kinds of stuff that they had to actually pay out to their customers, which they're really good at doing. And they had $56 million for gross earnings premium, which is at a good rate of 84% growth year over year. So their annual dollar retention over time is now at 81% and has steadily gone up ever since the company has went public. So this is basically due for customers staying with the company and then also bundling, having more products in their insurance package. Now they just released car insurance. They may have renter's insurance, homeowners insurance, pet policies. They're bundling, their customers are bundling products more, which saves them money, makes Lemonade more money, so everybody's happier, and their customer retention rate has also grown. So during the Texas freeze, they actually activated their CAT, or catastrophic operation process. So that way the majority of their claims were fully resolved within a week of the storm's onset. So one thing that I did hit on, they're super good at paying their claims, which makes customer satisfaction that much better, which leads to more retention. And then at the end of that, they can actually make their customers pay more for their premium because their customers love the product. Just like any other company like Apple, Microsoft, they can enforce premiums more as they have customer retention. So claims from the CAT added 50 percentage points to the gross loss ratio in this quarter, yet our EBITDA guidance for the year remains substantially in line with analyst consensus prior to the storm. The explanation is simple. We have extensive reinsurance programs in place, and they have these in place just for the eventualities, and they work very much as they were designed. So with insurance companies like this, you have random storms come by, stuff like that. If you are a shareholder of this or any other insurance, whenever major storms like this come by or hurricane season comes by, you're gonna be expecting this if you're a long-term shareholder. Stuff happens. The company, it ain't like they can, oh yeah, we're not paying you, and then customers definitely wouldn't stay with them if for some reason they didn't pay out their claims. But you're going to have losses like this in insurance companies. And the Texas freeze, I mean, when's the last time that happened? That is a very few and far between that happens. And it did impact the company in a big, substantial way. But the company couldn't help that. You don't know what Mother Nature is going to throw at you. And they actually are staying in line with analysts right now. It ain't like they had to lower their guidance for the whole year or something like that. They actually raised it, surprisingly. So for some of the guidance for Q2, we're looking at in-force premiums on June 30th somewhere in between 283 and 288 million. Gross earning premium is at 63.5 to 65 million. Revenue of 26 to 27 million. Adjusted EBITDA loss of 43 to 40 million. That's a loss still. Stock-based compensation expenses of about 13 million, which is pretty low for how big of a market cap this company is. And then capital expenditures of approximately 3 million. And then they go on to give the full year guidance. So they expect in-force premiums on December 31st to be somewhere in the range of 376 to 382 million. Gross earnings of 279 to 283 million. Revenue somewhere in between 117 and 120 million. Adjusted EBITDA loss of 173 to 163 million. Stock-based compensation of about 50 million. And then capital expenditures roughly 11 million. So if we do still see a stock sell-off, especially for mainly tech companies, so this is a big artificial intelligence company. They kind of use this whenever they're going over premiums with customers, what kind of rates they're going to give them. Basically depending on like how old the person is and a lot of different metrics. I know for homeowners insurance, they look at like where you live, how old your house is, has it been remodeled recently. Like there's a bunch of metrics that go into the artificial intelligence that they do use, and they actually have a really affordable homeowners insurance. That's the only product I've looked at. So this could be a buying opportunity. I'm not invested in the company. I'm not a financial advisor. Do what you want to with your own money. But I do like the valuation coming down on this company. I actually was thinking about buying it in the $40-something range, but I just want to see how Q2 plays out. I want to see like if they start lifting their guidance even more for the year. But I see for the next 2, maybe 3 years, like they're not going to be a profitable company. But in the long term, I do see this as being a pretty decently profitable company. And now with this stock pullback that we have, it actually looks somewhat intriguing, but it could come back down. It could touch lows for all we know. Nobody knows when the stock market is going to, or at least the techs, whenever they're going to stop going down. Yeah, we had a nice spike up today. I think at the very beginning, I actually bought more Palantir shares today and 2 more call options on Tattooed Chef and Palantir, by the way. And that was as soon as the market opened. My portfolio was down, I think, about 6.5% when the stock market opened. And then we finished about 6% up for the day. So there's a lot of volatility in the market right now, both down and up. So I hope this gave a good overview of my thoughts on the financial statements that they just released a couple hours ago from Lemonade. This is an intriguing stock for the long term. However, right now I have so many like Palantir and mainly Tattooed Chef right now, and Hyliion's getting very interesting. So their earnings should be coming out tomorrow. There has been talk that they got delayed until the 24th, but I can't find anything on the internet that actually proves that. So for all we know, they should be releasing their conference call and their 10Q, all that good stuff, tomorrow. So hopefully we can do a video on that. If they do delay it to the 24th, you already know we're going to do a video on it. Like literally as soon as I watch the conference call and get all the stuff written down, we're going to be doing a video on it, and we're going to go in depth on everything that I think. So I hope y'all are having a great day, and as always, make sure you subscribe, like, and comment. See y'all in the next video.